Are you feeling crushed in today's real estate market? Are you upside down with your current mortgages? Do you feel like you are sinking, making your house payment, and can't sell because you owe more than the value of your home? Are you facing foreclosure? Have you been told to just walk away from your home? You have choices. There are alternatives to foreclosure, and here today to share information with you is Marge Peck, CEO and founder of My Choice Listing.
Hi, I'm Marge Peck, and we're here today to talk to you about choices and alternatives to foreclosure. I'd like to introduce my guest, Mark Taylor. Hi, Mark.
Morning.
How are you this morning?
Very well, thank you.
That's great. Well, I've heard several people on television tell homeowners what they should do is simply walk away from their home and just let it foreclose. Should we give some people some other good advice today?
Absolutely. The first thing you should take away is that from this is that is definitely not the option to take, and hopefully we'll be able to educate you.
So if we're going to talk about choices that you can make, your first choice that most people consider that will come all by itself is foreclosure.
Correct.
And what does that do to your credit, Mark?
Wow, it is extensive. The damage that is done to the credit and to their public profile, which most consumers don't understand, is that this is a permanent lifetime record that affects them from here on out.
So people that are on TV saying simply walk away from it may be giving the wrong advice, especially considering what type of loans may be on your property. You still may wind up having recourse to the lender, which means your home could foreclose, and suddenly a year or two from now, the lender could come back to you and say you still owe the debt.
Correct.
Second choice that someone might consider is a deed in lieu of foreclosure. Now, can I give you my down and dirty definition of what I think a deed in lieu of foreclosure is? In the foreclosure process here in Arizona, when you're 3 months late, they will serve the notice that the foreclosure is going to begin, and they have another 3 months. So you've got a 6-month window.
Correct.
To me, a deed in lieu of foreclosure is call up the lender and say, I'd like to forfeit my 6 months of not making payments living in my home and give you the deed and still have a foreclosure.
Correct.
So I'm giving them the deed in lieu of the foreclosure process.
Otherwise known as a friendly foreclosure, still reported as a foreclosure, and the consequences are just as deep-rooted and as troubling.
So let's spend a few minutes talking about the next choice, because I think the first two would not be my preference. Let's talk about the third choice, which would be loan modification. We've heard so much about loan modification and hope for the homeowner, or sometimes I call it hope for the homeless, because the percentages of loans that have qualified for that in Arizona, I think, are zero.
The percentages are very, very low, and the information given to the public, which is very confusing, is that the loan modifications are actually wrapped up into refinance figures. For example, there's a major bank in town that published last month they did 58,000 loan modifications. That is true when you consider that the technical term for a refinance is a modification of the original loan that they've done in-house. So people taking advantage of these low interest rates, they get lumped into loan modifications, which we use as a term to help someone in a distressed situation in their home. So there's a lot of confusion. So very few loan modifications are done where the homeowner's helped.
So the person who's upside down and looking for loan modification, and when the lender says, we'll be happy to give you a loan modification, the majority of loan modifications that I've seen, actually all of the ones that I've seen, have been kind of like this. Hi, Mark homeowner, here's what we'd like to do. We'd like to lower your house payment for a period of years.
Correct.
Maybe 6 months, maybe a year, maybe 3 years, maybe 5 years. And then in the fine print, it'll say what we're going to do is the shortage that you haven't paid, we'll throw on the back end, or maybe in 5 years your payment will be higher.
Correct.
So is that truly helping the homeowner, or is it postponing the disaster situation they're in right now? In your opinion, Mark?
In my opinion, it doesn't help, and I can back that up in the fact that the Foreclosure Relief Organization shows that over 60% of loan modifications entered into last year are now back on the books for default. So it's a short-term band-aid. And the banks, the way that they structure it, offer clients out there, will approve a loan modification after a period of time proving that you're in distress, and once you make these 3 payments back to us, then we'll enter into a potential revision of your initial loan modification program, and then we might fix the payment for a period of 3, 5, or 7 years. So consumers, when they call up on the phone, are expecting this instant help, because that's what's been promoted by the press. It's a very lengthy, long, drawn-out process, and there are no guarantees given by the bank until you've forked over substantial amounts of money.
So expertise-wise, I've been in real estate since 1981 as a licensed real estate agent, and now I'm a licensed real estate broker and have been for several years. And Mark, you are a?
I'm a certified mortgage planner and a certified distressed property expert. Been doing this for 14 years. And with my clients in the last 20 months have done over 350 short sales.
So the important thing when you're looking at the situation you're in right now is what expertise are the people that you're talking to bringing to the table, knowing what your choices are so that you can sit down and make an educated decision which way to go. Most homeowners are thinking that they'll just sit and wait for the market to come back. So let's take a look at a graph that'll show you how long that's going to be. If your original loan was $350,000, interest only, which will be indicated here, today's value may reflect a value of $180,000. And if today, that's the big if in this, we were appreciating at 4%, you can see that you would be upside down for almost 18 more years. Wow. Think about that. You're going to be paying to live on the Titanic for 18 more years. Whereas if you do the short sale, you can see where the value of the home will be, and considering we're not appreciating, that we're still declining, the same neighborhood you live in could be less than what you sell for today. But I know you're sitting out there saying, I don't have an interest-only loan. My loan was amortized. I surely must be in better shape. So if you look at this chart showing an amortized loan and the same 4% appreciation, you're absolutely correct. You are in better shape. It'll be a little over 12 years that you'll be living on the Titanic. And the same situation where if you do a short sale, that home is going to be worth marginally less based on the fact that we're still depreciating than what you sell it for today. Life's about choices. Now you've seen the numbers, give us a call, 480-CHOICES.